Hello guys, what is happening? Welcome to this live stream. So I have some announcements to make about the channel. It's really funny because I was just watching the Rebel Capitalist channel. Many of you probably follow George Gammon as well. And it's funny because he's doing a load of announcements too, and I was just like, what are the chances of this? So the announcements, what's going on? So basically, obviously, I've done these live streams for a long time now, and I decided basically it was time to change them up. I myself am my biggest critic when it comes to the content that I create here on YouTube. And really, I was watching back the live streams, and I didn't like how, there's pauses. It didn't really flow very well. So I thought, you know what, I'm going to edit the live streams instead. And plus, I wasn't really interacting with you guys in the chat anyway. So it was kind of pointless live streams to a certain degree anyways. But I decided that maybe I'm going to cut down the amount of live streams I do and just edit them. I'll do like 2-3 a week as normal, depending on how much news and what's going on. And then I'll do like one really edited video per week as I was doing before, and that was 2 at one point, but it's just impossible to keep up with it now. I'm just so busy. So another thing is I'm trying to get a better setup. So let me know what the audio sounds like right now, but there shouldn't be an echo. I'm in a completely different room in the house we're in, and I think this room is going to be better. And not only that, I'm actually stood up, which means that I have way more energy because I hate sitting down and trying to do, these videos, these live streams, because it's not very animated and I'm 6'3". So sitting down is just not the greatest for me anyway. So I bought a stand-up desk. I'm trying to find a room in the house which is best for doing this, and then basically going to do the live streams from here. Basically, if you have any questions, by the way, just throw them in the chat and I'll get to that in a second. I'm just trying to run through all these announcements that I got to make. And thank you for joining me. Please hit that like button. I never say that anymore, but it really does actually make a difference on streams like this, because the YouTube algorithm isn't going to push it because, people aren't going to click on this type of stuff. So it will just alert more people that have got the notifications turned on that this is happening. Another thing that I always forget to say about is I have a free email list. I've linked it below. I just put out a piece the other day. It's totally free. You'll sign up. There's no adverts or anything like that. Like everything I do, it's 100% free. So sign up for that, and you'll get access to it. It's on Substack. In fact, I can actually bring it up. I was just looking at gold versus the dollar, but this was the piece that I put out the other day. The other news is I haven't been having that many people on the channel of recent. Used to have Scott Walters on here all the time. I'm going to get Scott back. Me and Scott are really good friends, and Scott is fantastic. If you haven't seen his channel, he's really great. He's one of the realtors that has been calling this what it is, calling a spade from the start of this crisis way back in 2021. So he's really genuine, like myself, and wants to just help people and help spread the word of all the stuff that is basically going down. And I've also got some other people that are lined up to come on the channel. I've got Montenegro64, another Brit, so that'll be phenomenal. I cannot wait for that to happen. So Montenegro64 is going to be coming on the channel. Got Travis from Real Estate Mindset, another friend of mine. Got Sachs Realty, and just a bunch of other people that I've been putting off for a long time coming on the channel, and they're going to be coming on the channel. So that's going to be absolutely awesome. And talk of Travis, he's right here in the house. So thanks so much, Travis. Travis is going to be on the show. He has an awesome channel. His channel is so much better than mine. I mean, the videos he's putting out are just superb. He's doing drone work, all these different things that I could only dream of doing. I mean, videos, macro, the economy, it's a big passion of mine. and I manage my own portfolio as well. So it's incredibly important for me to understand this stuff. And I think it's important for everybody to understand this sort of stuff, to be honest with you, because otherwise you're just going to be a victim. You are going to end up being a victim to all these central planners and authoritarians, which is they just keep on inflating and inflating and inflating. And eventually that's going to lead to different currencies being devalued massively. And we're already starting to see that, believe it or not. But it's just that I'm going to be getting into that in another video coming up. So thanks for... how about TREB data release today? I don't know what that's about. You'll have to give me a little more context. Where in the West Country are you? So I'm actually in Calgary, unfortunately. I don't like it, but we're actually going to be probably leaving, fingers crossed, by the end of this year. So we're actually going to be leaving Canada 100%. So it's something that we haven't been able to do because the pandemic put it off. We couldn't travel and go visit different places, but basically seeing the direction that Canada is going in, we don't want to be here at least for the next 3-5 years. We're in a lucky position where we can do that just because of what me and my girlfriend do. Our jobs, they can be done remotely. So and YouTube isn't my job, by the way. It's just a passion of mine, and it's something that I do because it is a passion. I mean, I wouldn't do this if it wasn't a passion, to be totally honest with you. All right, so just trying to go through the questions here. Sylvan Lake real estate is bad. Like the Trudeau short. Yeah, I try and make those funny because, you know, through all the serious stuff that I do on this channel, I try and make it lighthearted in a way. But it's difficult sometimes because you're talking about such serious shit that you cannot, like, you have to be serious. And it doesn't matter which way I go. People will say, you know, you shouldn't be so serious. People will say, why are you joking like this and laughing about stuff? And you can never win everybody. That's one thing I've learned being on YouTube is, you know, just let haters hate. Audio is great. That's good. I'm going to upload this to Spotify as well after. And if people could give me feedback on Instagram, whatever, just let me know if the audio sounds better. Because I know the office that I was doing the videos in is really, really good because I got multiple screens which I have set up for trading. So it's like super immersive for me to sit there and do live streams and stuff. But the problem is, there's a massive echo in that office, so it's just terrible. And I've got rugs, I've put curtains up. I'm not going to go and purchase a load of soundproofing because we're going to be leaving this place. So I decided to actually get a more portable setup that I could take with us. But anyway, that's enough about that. Let's see what you guys saying in there. Trent is in the house. Trent, I love you, man. You've been here so long. So many of you have been here so long, and I can't thank you enough for that. So let's see what else is going on here in the chat. I got a call from a real estate agent, and he told me prices will keep going up, trying to scare me off to buy. You know what? I think this is a really important point right now, because where we are right now is like the calm before the storm. And you guys that have been following this channel for a long time will know that I've been talking about the denial phase pretty much non-stop since real estate prices started to go down. I've been saying expect that prices are going to come back up at some point. There is going to be a rebound in activity at some point. And I think it's probably going to be this year, because think about it. The Bank of Canada, the Fed, they're likely to pause and hold rates. So once you've had the impact of those rate hikes filter through, you've still got a ton of buyers out there which have FOMO that are just waiting on the sidelines until something happens that triggers them to jump back into that market. And when you're talking about markets, even in stocks, I see this all the time because the way I trade is momentum trading. And when you're looking for momentum, you're looking for opportunities with volume. Well, I am anyways, but different people do different things. And the funny thing is, when you think about how the real estate market works, it's very similar to a fact that you will see like people are looking for a bottom. They're looking for a bottom, and then as soon as that bottom comes, they jump straight back in, and then you get the price go back up again. And I can pull this up actually, a great example of this, and it happened multiple times in this, is Tesla stock. It doesn't matter if you're talking about real estate or a stock, because both of them are based on volume. They're based on sellers and buyers. And if you look at Tesla, because Tesla was in a bubble too, still is in a bubble. But if you look at how this thing went down, it did not go straight down. I mean, you had some downside, but you've had some massive upside too that has happened. And that is people who are just sat there and they're saying, I want to buy this stock, I want to buy this stock, but I want to buy this stock when it's going up. And the unfortunate reality is the people who are going to get suckered into the market right now, into the real estate market, these are going to be like 90% of the ones who are going to lose the home. Because if you think about it, we've had a correction in housing, but we're far from back to the trend line. In places like Toronto, going back to the trend line is going to be like a 50% plus decline from top to bottom, which is unbelievable to imagine, but it's totally possible nevertheless. People will say, no, that's not possible. But you would still be going back to a trend line where you were on an uptrend. Houses would still be higher values than they were in 2008 because of inflation and other things. But it's just going to be totally different. So I think it's funny because now we're waiting for the recession. Now we're waiting for the labor market to crack. And those are the things that happen last. And whilst we're waiting, things might go a little bit quiet. The stock market might start going up. But people forget that the debt market is deteriorating. Companies, their debt is coming up for renewal. They have to renew this debt. They have to cut costs. They're going to be laying people off. There's something like $1 trillion that has been pushed off and is going to go up in bonds for renewal this year. And $1 trillion is going to be renewed at significantly higher interest rates than we've ever seen before. So these companies are going to have to cut costs because especially public traded companies that sell bonds, stuff like that, these companies, they want to present the best earnings possible to their investors. Their duty is to their investors. It's not to the people that work at the company. So the labor market's always the last thing to go because companies don't want to let their workforce go, especially with all the problems that we've had. I mean, think about it, like labor shortages and stuff like that. But I think if you work in a blue-collar job, I think you're going to be fine because there's such a shortage of those jobs, whether you're in the US, the UK, Europe, Canada. Why is there a skill shortage of those jobs? Because the bubble economy has pushed everybody into that economy. And now the blue-collar workers, they're actually seeing their wages jump substantially. But they're just a minority now. They're just a small fraction of the economy because we don't make anything anymore. We don't have much of an economy anymore apart from the bubble economy, which revolves around finance, real estate, different things like that. And it's cyclical. Canada's been in a longer cycle, but it's cyclical nevertheless. So let's see what else is going on here in the chat. Talking too much. Going off on tangents. I always go off on tangents. How is it living in Calgary? I mean, I don't like it. Some people might like it. It's a liberal city, too liberal for me. Some people would say it's conservative who live out east. I don't know. But it's got all the problems of other Canadian cities. It's getting worse like other Canadian cities. I hate the weather here. I love the skiing. But Calgary's pretty far from the mountains, and the skiing's just so expensive. Guys, everything is just so expensive in Canada now that it's like, why? What's the benefit to living here? And it's not like it's safer either. I mean, it was like just a couple of months ago, I think it was about 3 months ago, there was a shooting. 2 people got shot in their driveway, literally a couple of blocks from where I live. And at that time, when that shooting happened, I was out for a walk and I heard, I thought it was a car backfiring. And I heard that. And I was just thinking, like, people say it's safe, but is it really safe? Like, people laugh at people that say, "Oh, I'm moving to Mexico," because they don't go to Mexico, they don't see what it's like, and it's very area specific too. But the same problems in Mexico are happening in Canada too. I just think there's more of a facade that is in place in Canada, to where the government, who influences all the media, is trying to hide what's really going on. Because I was downtown Calgary today walking around, and let me tell you, when it's quiet down there and you've just got all these mental people, these people on drugs walking around, and there's been all these random stabbings and all kinds of different things, it doesn't make you feel safe. No, and I mean, you can't even carry anything for self-defense in Canada. I don't even think you're allowed to carry pepper spray or anything like that. So, and I mean, the police, do they really patrol much? Not really. I don't see them much. So, I mean, living here has been an experience, put it that way. That's all I'll say on that. All right. Alberta, by the way, outside of the big cities, Calgary and Edmonton, some of the people are just phenomenal. Some of the little towns are just phenomenal too. And they would be good places to live, but the problem then becomes the cost of living and the monopolies that you have in place in those places. Like, usually they only have one grocery store and stuff like that. But Alberta in general, probably the best place in Canada. Calgary and Edmonton, they're just like all the other cities. That's a problem. They're just decline, dying essentially. So let's see what else we're... D-Man says Canada's biggest banks set aside $2.5 billion to cover an expected wave of loan defaults, said Toronto Star today. It's pretty interesting. I think they've all reported now, the big banks, but we're going to do some videos on those big banks and get into the nitty gritty of what's going on their balance sheet. I really want to see what's going on with loan growth. Like, are loans growing, or is their income that they have right now, their earnings, mostly a product of higher interest rates? Because you've got to remember, basically the banks were given all these reserves during 2020 from the Bank of Canada, and they can park those reserves at the Bank of Canada and get the overnight interest rate. So the Bank of Canada essentially pays them interest just on having cash parked there. So at today's interest rates, when you're talking about the amount of reserves that the Bank of Canada gave them, and even though they're taking it away slowly, it's still not coming down massively. That could be a large portion of their earnings. And then you've also got the fact that people are still taking on credit card debt. People are just going more and more into debt. So their guidance, and I can see exactly how in 2008 you had this happen too, and in 2007, whereas guidance from banks was rosy, right? Because the banks are looking at their credit and they're saying people are still taking our credit. They're taking the more risky stuff, which we get better interest rates on. But they obviously are going to sugarcoat over the fact that a lot of people aren't going to pay that back. There's going to be a massive amount of defaults. I mean, we had that Statistics Canada survey come out, when was it? A couple of weeks ago, that said 1 in 4, 1 in 3 can't afford a $500 unexpected expense. I mean, that tells you where we're at right now. That tells you just plain and simple where we're at right now. People are freaking broke. They're fucked, and it is not good. So we are in a terrible position right now. And that was Statistics Canada, of all people, who put that out. So the number is probably more like it's probably like 1 in 3 instead of 1 in 4. So I think that speaks a lot. And then the fact that consumers are piling on credit card debt is another thing. And the funny thing is, it was somebody on this channel that told me about something I'd never heard about. And this is what I love about this channel is, you know, a lot of the time I'm learning stuff from reading your comments as well. And it was the lipstick effect. I'd never heard of the lipstick effect. And kudos to the person, if you're in the chat, make yourself known. But the lipstick effect is essentially when people go out and they buy these small ticket items because they can't afford those big ticket items like the vacations and all the rest of it. And essentially that could be what's happening right now, because you go to malls, it's pretty busy. You go to restaurants, pretty busy. But these are all kind of small ticket items when you really think about it. But the vacation stuff, not so busy anymore. I mean, I've been traveling and it is getting quieter and quieter. But then again, there's seasonal swings in that as well. Like we were down in Cabo and it's a lot quieter. And it's also hard to tell because there's such massive Airbnb bubbles anyway. You can't really look at vacancy rates in these areas because they might be going up. There might be more vacant Airbnbs, but that's just a product of more people buying Airbnbs because they're just so stupid. But let's see. Canmore is in a bubble and doesn't get affected so much by market crashes. Yeah, you could be right. I don't. You know, it's funny because we actually looked into getting an investment property in Canmore and we were planning on doing short-term rentals. This was like 4 or 5 years ago. It was like 2018, something like that. And the reason we didn't bother was just because the Airbnb restrictions and the short-term rental restrictions and the fact that people don't want short-term rentals there. And there's really a push by the city to get more long-term rentals. So we just thought, screw that, you know. And that's the funny thing when it comes to like the foreign buyer ban, when it comes to things like that. It really affects sentiment more than anything else. Because I know a lot of people are going to say, well, there's ways that people can get around the foreign buyer ban. I'm sure there is. But what sort of signal does that send to foreign buyers if you're banning, if you're trying to ban them? You know, that doesn't send the signal that we want your money. And especially when you're spending like millions of dollars. So it does affect sentiment a lot, and it's like everything. The Bank of Canada, really, their primary tool, as they call it, is sentiment. So, but yeah, you could be right about Canmore, because you got to remember that it's like I said, the skiing here is awesome. The mountains, the Rocky Mountains are awesome. To me, Calgary really isn't the Rocky Mountains. It's just a city that is like 2 hours away. I mean, a city by the mountains is a city like Salt Lake, right at the foot of the mountains. Calgary, you're about an hour and a half, 2 hours from like the major attractions. So you're not really going to get, you are going to get tourists that stay in Calgary, but mainly they're going to be going to Canmore. So that drives an economy there in Canmore and Banff. And those are the international destinations for a lot of people. I mean, we just had my brother come over and we were skiing and everything like that, and they came over from England and they came over for the skiing, and they said the snow's some of the best in the world, that they've skied all over Europe and everything like that. One thing they did say though was the cost. Everything here is just a complete rip-off compared to Europe. So I'm just going through the comments right now, see if there's any questions, what everyone's talking about. Thoughts on CBDC and how far Canada is from implementing. I probably think they're ready to go. I bet it's right there in the background, ready for the next crisis. I mean, who knows what that's going to do? It's really, really hard to say. But yeah, like CBDC is just not going to be a good thing. I mean, Mexico has also announced CBDC, I think by the end of this year, I can't remember. But you have to remember, in Mexico, cash is king. Like, nobody really uses credit in Mexico. So how much impact is a CBDC really going to have? I don't know. I don't think that much. But in Canada has one of the highest utilizations of credit cards, debit cards. You know, barely anybody pays in cash. So yeah, it's going to be easy for Canada to go to a cashless society, but I think the scary thing is, I mean, the government is just keeps getting more authoritarian, and the way, and I'm disappointed because Pierre Polivet or Polivet, or I pronounce his second name wrong all the time. You know, I followed him for years, like many people probably. And he has changed since becoming Conservative leader. And that is because they're progressives. And I don't think they're going to do much. I do think that they'll win the next election. But I don't think we're going to see as much change as people really think. In fact, we could see like a complete flip-flop like happened with Donald Trump. I mean, think about Trump. He was like campaigning back in 2015, 2016 about how these low interest rate policies and all the rest of it. And then he gets in charge. And as soon as the stock market goes down, guess what he's doing? He's dropping interest rates. He's pressuring the Fed. As soon as 2020 hit, what was Trump doing? He was pressuring the Fed to lower interest rates to get the stock market back up. And I think Pierre, he could be similar to that. He could be going by that playbook. But, you know, no politician is perfect. At least he'll be better than Trudeau. Quite frankly, anybody would be better than Justin Trudeau. Just a disaster. All right, so top 3 places to live in your humble opinion. It depends. Are you talking international? Are you talking in Canada? You're talking in North America. If you're talking international, it really depends on what time zone you work on. So like I work on Eastern time zone, for instance. So that really restricts me from going to Europe. But I was having a conversation with a subscriber on Instagram the other day, and we were talking. And I was thinking of like how I could maybe move my work in a way that I could go to a place like Georgia. I think Georgia, the country of Georgia, not the state of Georgia, is probably one of the best places in the world that people could go right now. If they don't like Dubai and they don't like the UAE and they don't like that type of... Because I know there is like a lot of fakery with that. I've never been to the UAE or Dubai, but I've heard that many times. I got friends that live there and have said it's very, very fake. But they would sort of be the top places. And then it also depends like what you do, because there are places that you can go for tax advantages where like if you're a US citizen, you're going to get taxed anywhere you go. But if you're Canadian or you're from the UK or whatever, then there are certain countries like Costa Rica that are on territorial tax systems. So you moving there, you're instantly saving yourself like 30, 40, 50%, depending on how much tax you pay. So there are places that have advantages, but it's really trade-offs. When it comes to moving anywhere, there's no perfect place. It's going to be trade-offs, and it's going to be based on what you want from a place. Do you value safety more than anything else? Well, then it's not going to be Central America, is it? It's going to be somewhere else. Do you like, is cost of living top of your priority list? And that's again why Georgia, hands down, takes any other place. It is very, very cheap there, very, very affordable, and they're very neutral when it comes to everything that's been going on with the Ukraine. And I think that's important, because I think that people do need to have a backup plan in case shit does hit the fan, that they know, okay, if that happens, then I'm going to go here. Because who knows what these countries are going to do, like Canada and the US and the UK. They're going to start doing drafts. I mean, I'm not going to Ukraine and fighting in a war. I mean, Ukraine and Russia, I don't really want to go into that. But anyway, both countries, in my opinion, are corrupt. Just two corrupt countries fighting each other. And yeah, I don't support war, and the West does support war, because by sending weapons, by not allowing negotiations, by, you know, blowing up Nord Stream 2, possibly, what are you doing? You're just making the situation worse, which is what they want, because the military industrial complex is such a big thing. So, you know, is what it is. All right, I'm just looking. Where will you head to post-Calgary? It's a toss-up. It really is right now. So I can't really say. We're looking at Panama. Panama has like great tax, but we need to go there and really figure it out, because I've done a lot of research on Panama, and it's from what I read and what I've heard and all the research I've done, it's nothing like Mexico. All these countries in Central America are kind of separate to each other. Costa Rica, we're also considering that, but it's a little more expensive in terms of like your cost of living is going to be more expensive. But we think, the thing is, we're thinking that we're just going to live a place for 2-3 years. We're not planning on just moving to a place and that's it. We want to move to a place 2-3 years, a place where we can invest in real estate, and then we can have that investment, and then essentially we can just live wherever the heck we want to live. We can live in Mexico for 4 months, come back to Canada for 4 months if we want. We can do whatever we want. We won't be tax residents. So it'll be great. and yeah, so I mean, but again, like I refrain from answering questions about where I'm going to move, because it's such a personal thing. Like, it depends what you value. Like, Panama is safe, but it's not the safest place in the world. And if you have kids, if you're not willing to learn a new language, it could be tricky to you. Mexico's a good place, but I'd only really go there temporarily. Mexico looks like a really good place, to be honest, but the problem with Mexico is, and we've explored all around Mexico, is real estate is in a bubble everywhere, and we don't really want to rent a place. We'd rather just buy that place, live in it for a while, and then move somewhere else and then rent out that place. That would be our plan. And essentially, Mexico isn't really a good place to do that. Panama's pretty good. Colombia's pretty good. Costa Rica's pretty good. But even those are in bubbles, and that's really why we haven't been pushing a move so much, because there's no rush to move right now. Everything's in a bubble. I think, actually, funnily enough, the best time to leave Canada will be when unemployment starts exploding. That will be the best time to leave and go traveling, have a gap year, or move to another country or whatever. That will probably be the best time to go, because, I mean, crime is bad now, but crime is just going to get higher. Just looking at the comments here. Man, oh man, there's so many. What are your thoughts on short-term GIC 3 month at over 4%? I mean, I think they're insured by CBDC. It's whether you want to be stuck in Canadian dollars, but 3 months is really short-term. So that's pretty good. 4%, that's a pretty good rate for 3 months. So yeah, my thoughts on that are pretty good, actually. That's not bad. And remember, you've also got bonds that you can buy. You can buy government bonds. I wouldn't buy corporate bonds. I wouldn't touch them with a 10-foot pole. But government bonds you can actually buy from most brokers if you just inquire about it. It's not something that they actually publicize too much, because they don't make too much money from it. So they're not advertising it all the time. That's essentially why platforms like Wealthsimple, I don't even use Wealthsimple. I think it's garbage, because it's just pushing you towards products that they want you to buy, stocks they want you to buy, ETFs they want you to buy. But that's why they don't have bonds and stuff like that. So see what else we got. Thanks for the super chat, by the way, Kevin. Greg, do you think the Bank of Canada will increase rates with the states going into more rate hikes and higher inflation? It's a good question. I don't really know. I think it's 50-50 from this point. I mean, they said that they're pausing at the last meeting, I believe. So, I mean, maybe they'll hike, but they're probably going to stick with what they said before, because they're pretty arrogant, these central planners. So maybe no hike. But having said that, what's going to be really interesting is if they don't hike and then bond yields start to rise. Now, that'll be really interesting. We talk about the yield curve inversion all the time on this, but essentially when it uninverts or starts to uninvert, then that means you are really close to the recession, if not already in the recession. So that's likely to happen at some point, and the spread is getting closer together. It has been getting closer together. So that's going to be interesting. And I think the pain that is on people right now in terms of the interest rates, 25 basis points, what's it really going to do? Not that much. It's probably going to send bond yields down, because that's what's been happening. Every time they've hiked, bond yields have actually fallen, because essentially the bond market, at least at the longer end, is saying, this is bad. Like, you are destroying the economy doing this, just at a later point. So that's really my thoughts on that. I hope that kind of answers your question. But yeah, I'm just going down more comments, see if I can find. Puerto Rico, revert to mean, said, yeah, I mean, that's a good option if you're a US citizen. I think it would be pretty complicated to get there if you're not from the US. But again, I think Puerto Rico is kind of worse than a lot of Central American countries from what I've heard. I may be wrong. And also the cost of living there, I think, is pretty high from what I remember. So Panama is Chinese run. Well, I guess you could say that in some way. I don't really think so, actually. It's pretty heavily tied to the US. I mean, Mexico and all. You got to remember, all these other countries that are more neutral, like Mexico, they are more open to dealing with China than the Western countries, because we're all getting into like these little... we're all getting more and more bifurcated, essentially. And then you've got these neutral companies that, yeah, we're happy to take your money from China. We'll take your money from Russia even. I mean, when I was in Mexico, the billionaire, I can't remember his name, his yacht, every time I've been to Cabo, has been there for the past 3-4 months. So Mexico will take anybody's money. They'll take Chinese money. I mean, Didi, which is like the ride-sharing app in China, I think it's banned or not allowed in Canada and the US. They have it in Mexico, as well as Uber and all the rest of them. I mean, I don't know. Is that more of a free market that they're allowing Chinese tech companies to compete with American tech companies? I'll let you be the judge of that. But I don't think they're owned by China. I think there's a massive American influence that's in Panama, especially just due to the canal and everything that happened with that. And the fact that they use in the US currency as well. I forgot to mention that. They use the US dollar. So, I mean, if they were Chinese run, they'd be using the Chinese yuan. So, in my opinion, anyway. Montenegro, Marco says, yeah, that is another great place. Well said, because that is another great place. And we were looking at Montenegro. Montenegro is a great place to go in Europe. Definitely. Georgia, Montenegro. A couple of the islands, I think, are good. Malta. But again, Malta is expensive, very expensive, if you're not like a multi-millionaire. Right? Anyway. Aruba is crypto friendly. I love Aruba. Yeah, I've heard Aruba is, again, a good place to go. And good tax laws in Aruba as well. I'm just going down. I thought I wouldn't be able to do this because my voice... I haven't been sick, but I've just had like bad throat. And my voice has been kind of raspy. So I'm just looking to see if there's any questions in here. How much do you think real estate will decline by? I mean, that is a difficult question to answer because it depends what you're talking about. I think it will go back to the trend because that's what happens when pretty much every bubble, actually, when you go back. There's a great book that you can read, and it's by Hilliard Macbeth. I've actually had him on the channel twice, and I should get him back, actually. I should write that down. Hope I remember after. But Hilliard, his book is phenomenal because he goes through all this data and research of different bubbles, comparing it to Japan, the United States, and he's talking about the Canadian real estate bubble. And I think he came out with his book in 2017. So he was definitely early when it comes to calling the crash, but I don't think that means he's wrong by any stretch of the imagination. He's just early. It's very hard to call the top in these things many of times, but I mean, this has been a pretty easy one in most people, in my opinion anyway, because just the fact that they have gone so insane with interest rates at the debt levels that we have is just, after what has took place in 2020 and 2021, is just unbelievable. And the funny thing is, we were heading for this recession anyway. I was expecting, and I wish I was doing the channel back in 2019 so I had all the record of me saying this, but when the yield curve inverted in 2019, I was expecting a recession. That's when I started to essentially sell stuff in my portfolio, move more into cash, more into precious metals. And that was all anticipating a crisis. Now, at times, I was like getting pretty worried because the stock market hit an all-time high in February. I can't remember exactly the month that I started selling stuff off. I think I started selling stuff off in the summer. Whenever it first inverted and held for the first couple of months, that's when I started selling stuff off. But then when the stock market hit an all-time high in February, I was like, holy crap. Because, you know, everybody gets emotions. We've just got to try and control them the best we can. When I get something like that happen and I'm like, oh my God, I need to jump back in the market, because that's what my brain was telling me. You need to jump back in the market. And even right now, with this bear market rally that we've had, and it could continue definitely because we're in that denial, and there's plenty of time between now and when things are probably going to collapse by the end of this year by the looks of it. But if you think about it, like, your emotions, you have to be in control of them, because if you're not, but you can, well, I'm totally losing where I was going with that. What I was going to say is you can use that to your advantage. When you start to get that feeling that, hey, I need to buy a house, I need to get into the real estate market, probably a good chance that you shouldn't be doing that. And the same when it comes to buying stocks. You know, in fact, when I started trading, I would always act off my emotions, and I would lose money, and I got lucky on a really big trade, and that's what really got me into trading more. But the thing is, when it comes to trading now, I actually do the complete opposite of what I want to do. So I look at a chart and I go, okay, looks like we've got an opportunity here. What do I want to do? And then if I'm like, I think I should buy here, then I short it because that is essentially, I know that like 60 to 70% of the time, if I actually do the opposite of what my emotions are telling me to do, I'm going to be right, because that is exactly how the markets work. They play on your emotions, and that is how people lose so much money. It's so easy during these phases in markets to get duped back into the market. I mean, look at it right now. The mainstream media is going wild with this soft landing narrative that we have, and you know, so many people are going to be buying into that narrative. They're going to be thinking, wow, nothing's happened. There's been no recession in Canada. People aren't defaulting. Soft landing's here, isn't it? No, it's just the labor market is the last thing to go, and you're going to get the defaults when people start losing their job. And that's starting to happen slowly, very, very slowly. I mean, you look in Alberta, for instance. Somebody asking about the job market, I can tie it into this. But if you look at Alberta, unemployment's going up. It's been consistently rising since June of last year. So it hasn't spiked massively like you're going to get raining defaults, but it is going up quietly in the background, and it's up about 20%. But bear in mind, it came from a low. So, you know, it's just going to be a complete rug pull in all asset classes, in my opinion. So markets are irrational. I would not short in this market, to be totally honest with you, because, there's going to be some wild rallies, I think, and some wild jumping out the window down. Just looking in here, see what's going on. Elon, where are we? You're better off leaving Canada for the USA, Texas, or Florida if you have a sought after skill set. Yeah, you know, I think for a lot of people, the US is a good option, especially if they got a Canadian passport, because when you have a Canadian passport, then it just means that you get access to a bunch of visas, which you don't get with pretty much any other passport. I think the only other one is the Mexican passport, I believe. But yeah, you know, the US isn't a bad option for sure, because the thing is, and I deal with a lot of US companies for work, and the thing is, that's great, because the US economy is really is really going to be the last domino to fall in terms of this global debt market collapse that's going to happen. And this, I'm talking long term here, because in terms of the actual full collapse of the debt market, we're at the very start of it. But if you think about this as like a 50-year cycle, it's not going to be going down in like 2-3 years. It could take 10, 20 years. And that the same goes for the dollar losing reserve currency status. But basically, I do think the US is a good place to go because of the US dollar, and because the fact that they can inflate and get away with it to a certain degree, for now anyways. And Canada can't do that. That's the thing. You know, Canada has built this massive debt bubble, bigger than 2008 in the US. And it's such a large portion of its GDP. And GDP isn't the best number, I get that. But it's such a large percentage of GDP. It's well over 100% when you add in all the debt. And when you think about, you know, even if 10, 20, 30% of that debt has to be destroyed, how much money would be needed to bail out the system? You're talking like so massive numbers, it makes your eyes water. And the thing is, Canada can't get away with inflating that much. So it's going to be painful in a lot of different ways, because a lot of those losses will be shifted back onto the banks. So the banks are going to have a rough ride for decades. They're not really going to want to lend, because they're going to be dealing with all these losses that they've had for a long, long time after this. And essentially what they can do in Canada is probably a bail-in. And I definitely think that's something that Justin Trudeau would consider, because he's more authoritarian, and he could definitely come out and say, well, look, we're getting these guys back by doing this bail-in, and all the investors are getting screwed. But I've been looking into recently all the unintended consequences that happened in Cyprus when they did a bail-in. And I'd urge you to go check that out, because it's really, really interesting. If you're interested in this kind of stuff. I mean, that's the thing. This whole channel is a passion of mine, and this stuff really interests me. And I think you really need to be interested in this stuff, even if you don't have a passion for it, because you need to know what's going on in order to protect yourself in the future, so you're not a victim, because there is going to be a ton of victims. The herd is going to be the victim. So yeah, it's kind of crazy anyways. Just going down again. Mexico said won't have CBDC. Oh, I'm on the wrong chat. I was going to pull that comment up on screen, but I'm reading the wrong chat. Said they won't have CBDC ready until 2024. Okay, that could be interesting. Cal somebody, another long time subscriber. You are an ace, man. So glad to have you here. You've been supporting the channel since I was doing these videos in parking lots, I think. the great Canadian peso is coming to a city near you, folks. If you believe Tiff Macklem cares about your purchasing power, you will be sadly mistaken. Yeah, I totally agree with you. They don't care about your purchasing power. I mean, look what they have done to it over the past 30 to 40 to 50 years. And I think this is going to be the major problem and decision people are going to have to make in the future, especially when it comes to investing, is what currency do they want to be in? Like a legitimate question, because let's say you invest in real estate. That real estate is denominated in Canadian lira. So if it's denominated in Canadian lira and the lira gets inflated and it will like long term, looking out into the future, the Canadian dollar is going down. It will continue going down as measured against gold, as measured against the US dollar. I mean, I was looking at it actually just before this, not Tesla. Oh man, I just had it up. Let me get it up. Yeah, so this is gold versus the Canadian dollar. And look where it is right now. And this is a weekly chart, but it's not far away from the high. The high is at 2,761 Canadian dollars for an ounce of gold. And we're at 2,522 right now. Let's pull this out to a month. Look at this thing. Look at this thing. It's just been on an absolute tear since the inflating started. They don't care. They really don't care. And I think a lot of people will fall victim to believing that currency is actually money, because it isn't. Like, money, by definition, is meant to be a store of value. How is a currency a store of value if it's just constantly being inflated? Even right now, I mean, we have really high inflation and we have interest rates of 5%? They can't even get interest rates above inflation because of the amount of debt we have. So that tells you that we're at a catch-22 situation where, they can't go any higher with interest rates because of the debt. Inflation is eroding everybody's purchasing power, and it's likely to remain high. We're likely going to see more green inflation as well, because that's another thing. They're pushing this whole climate change agenda down our throats, and that will come with a load of costs. And those costs the majority of those costs will be inflation. So we're going to see that, because you can't transition to all wind turbines or whatever it is. I mean, I know that's just a terrible one. But you can't transition away from fossil fuels without a massive cost. And who's going to bear that cost? It's going to be me. It's going to be you. Well, it's not going to be us, because we know better than to trust in these currencies. And I believe that, I think it's the dollar, or is it the pound? I can't remember. But it says right on the note, like, we trust in this. And there is no trust in it at all. I mean, if you look at the US dollar, for example, US dollar, it buys 99% less gold than it bought when they went off the gold standard. So, I mean, that just tells me everything I need to know. And the thing is, when it comes to gold, you're talking about like the oldest asset in the world, like even in the Roman times, in the Egyptian times. I mean, you really have to look at the history of gold. It's the only thing that has remained and done its job throughout history. The only thing. Gold is God's money. That's my team all the way, says D. Trent. Yeah, me and you, buddy. And the great thing about gold, great thing I think anyway, is that you don't need to put 100% of your money in gold. You can just put 20% of your money in gold, or 15 or 10%. I mean, speak to a financial advisor or a financial professional and talk to them about that, because that is something that a lot of wealthy people do. But what is stopping you doing that? What is stopping you doing that? I mean, even if you're not wealthy, what is stopping you putting 5% in gold or silver? I mean, I really think it makes sense, especially with the just instability. And I think there'll be an opportunity in gold as well, because normally anyways, when the stock market crashes, which we will get to eventually, the proper capitulation phase in the stock market, and it will send gold down, it will send oil down, because these hedge funds will be selling anything that's liquid to cover margin calls, and they'll be selling gold, they'll be selling oil, and that can bring gold down to a discount of 20%, 30% sometimes, which is great if you're looking to buy, and it's a good thing. Anyway, that's just my 2 cents, and really you just do whatever you want to do. But that's just my 2 cents on gold. I believe I have to say that because I think in the future, when I look back at videos like this and live streams like this, I'm going to be like, man, I'm glad I talked about gold so much. And that's not me puffing my chest out or anything like that. That's just the way I think it's going. And I don't think that's a good thing. I don't think that's a good thing for the West, especially. Just going down. Man, we've been going 55 minutes. We're on a roll. Thank you for your videos. Thank you for watching the videos, because without you guys viewing them, it would really be pointless me trying to put this information out there. And I really do believe it's important, and that's why I do it. And the fact is that I'm here because it's a passion of mine as well. Because if I was driven by money, then you're never going to get anywhere on YouTube if you're driven by money. I mean, the costs of running channels like this just for software would make a lot of people's eyes water. I mean, just the program that I do thumbnails on costs me something ridiculous, like $100 a month. Above my pay grade, great channel. I was actually on this channel, so go check him out. Great channel, and I'm sure in fact, I should get him over onto this channel at some point. I'm going to be doing more interviews in the future. I'll definitely get to him, but his channel is awesome. Man, it's the dry air loot. It's that time in Alberta. Nice to have you here, trader. You've been here a long time as well. Do you think the Canadian dollar will reverse course in the future? A reverse course in what sense? You mean go up or go down? I mean, if you look, and it depends what you're measuring it against, again, because that's vitally important. Are you measuring it against purchasing power? Are you measuring it against the US dollar? Are you measuring it against gold? But if you're talking like, let's pull up, would 1 month be enough? Let's see here. I'm just getting a chart. US versus Canadian dollar. Month isn't enough. I don't know because I don't pay for TradingView anymore, so I'm not sure if I'll have access to do this. Yeah, no, I don't. The date is not long enough. I was going to show like a historical chart. There's ups and downs, obviously. If what happens that we've seen in the past when there's been crises like 2008, or when the Federal Reserve pivots and starts to inflate, then yeah, you see like a reversal of sorts where the Canadian dollar would appreciate against the US dollar. But then what would it be doing against gold? What would it be doing against purchasing power? What would be going on in the Canadian economy at that point? Because those are all other questions that you have to ask. Because think about it. The Canadian dollar went up after 2020. I mean, I think it got to 82 cents, something like that, was the high it put in. It wasn't as high as it got after 2008, though, because it was above $1. And the Canadian economy just doesn't look that rosy anymore. So if there is a crisis, I think Canada's going to be having a crisis before that, possibly, that crisis happens in the US. So that could put massive pressures on the Canadian dollar. But yeah, it's going to go up, it's going to go down. It really depends what time frame you're talking about and what you're measuring it against. I mean, long term against gold, gonna go down 100% in my opinion. Long term against the US dollar, again, I think 100% is going to go down long term. I think at some point we'll hit 50 cents, and maybe then people will wake up to what's going on. But I really don't know anymore. I think for the majority of the herd, we're never going to wake them up. We just have to accept that fact and thank God that we have a community together where we're all together and we know what's going down. So it's you should consider getting a Canva account. Yeah, I did have Canva at one point and I dropped it for some reason. But yeah, I it's just having time. Like, you guys probably think that I have all the time in the world, but really I wish I did, but I don't. Like, I work a full-time job essentially. I got many side hustles that I do on the side, but the thing that brings me back to doing this is, like, it's passion. It's that I want to help people. It's my outlet to give back to people. That's why I come and do this. But yeah, like, it's kind of crazy. I wish I had more time to look into stuff like that, because there's so many good streaming softwares as well. StreamYard isn't the best, I know that. But yeah, like, it's just having the time to research all these different things. And you know, one video that I'm going to be doing, which is going to come up, is about pensions. And because I was talking about this on Twitter and it's just insane. And it came from somebody commenting on the YouTube channel. So I'll show you. I'll whiz over to Twitter. It's basically, the Canadian dollar is down 25% against the Costa Rican colon. It's down 19% against the Mexican peso. It's down 7% against the US dollar. This is yearly, but you're talking like it's at 5-year lows against the Mexican peso. So if you are a pensioner and you retired in 2020, 2021 and moved to any three of those countries, you've just seen your pension just get slashed because your purchasing power in Costa Rica, for example, is down massively. And then you've got inflation. You've got to add on inflation to that as well, because I know for a fact Mexico inflation since 2021 has been 30% at least, just like it's been in Canada, when you're talking about the real inflation rate, not the phony numbers they crank out at places like Statistics Canada, the BLS, and all these other places. So when you think about it, you could be talking like over 50% cut in people's pension. Do you see why I kind of, and this is just my opinion, guys, really, honestly, you are welcome to do whatever you want. And I would prefer if people didn't follow me when I say anything like this. But I think that having a pension in a place like Canada, waste of time, especially if you're my age. Just complete waste of time, because by the time you retire, for a start off, you're not going to be able to make the return that you're going to need to offset the devaluation that the government is doing. So your pension is going to constantly be going down in value. So you're better off going to some other country that can actually fight inflation better, that can or even deliver a better return. I mean, think about Mexican government bonds right now. They're giving you like 13%. And I'm not saying go and invest in Mexican government bonds. I'm just saying, like, there are investments out there that yield significant large amounts of money compared to like what you getting in Canada on a 1 year, probably like 4.5% or lower, I think. So, and then if they decide to inflate, what are you going to be getting again? Like, if they drop rates, let's say down to 2%, which would be a huge cut if you think about it, then where are rates going to be then? I mean, where is inflation going to be then? And what does that mean for pensions? So I think people need to think about stuff like that. I mean, I never even think about retiring anyway. I hope I never have to retire because I love what I do. I don't want to retire. But you know, and again, that depends on what you're doing. Someone said Nomad Capitalist. That's a great resource. I've watched a ton of their videos Well, I've binged watched so many of them when I've been looking at different places to move, different ideas, things like that. They are fantastic, and they have so many good free resources as well. So they're really, really cool. I'll see if there's any more questions, and I'll wrap this up. I need to get something to eat. Coming up. You only have to spend one day. Yeah, not sure what that is about. Reevaluate. I'm not sure what that's about. Some bizarre questions in here. All right, let's see what we got. Recent. Good evening to you too. Yeah, Vic, you nailed it with that. I don't even have to say anything else. You nailed it. What do you think about property maintenance and what? Can you say something? I'm not sure what you mean, but I'm going to guess that you're talking about like property maintenance and how much it costs and the inflation of that. Maybe maintenance costs of condos, condo fees, things like that. It's going to go up. It's going to go up a lot. It's going to follow real inflation, not the CPI. You know, it's kind of crazy because I've been hearing all kinds of stories from you guys saying that condo fees have gone up 20%, 30% in some places over the past couple of years. So yeah, they're only going to go up. And especially as the demand for blue collar workers just gets higher and higher because there's more and more of a skills shortage, which is going to happen. Because the thing is, people don't realize this, but I've been through people don't realize this when it comes to the Canadian immigration system, but I've been through this. And Canada's immigration system is so freaking broken, you would not believe. You know, they prioritize refugees over blue collar workers, which they desperately need. Nurses and doctors can't work because they need so many different licenses and all the other crap. But refugees can get here real easy, and the government will pay everything for them to do it as well, which is just kind of insane. And I just think if you're going to allow refugees to just come here, then you've got to level the playing field for skilled workers at least, which is something the economy desperately needs. But the problem is Canada's just going to struggle to attract any type of talent because anybody with skills is going to be attracted to the US. Why are they going to come to Canada? They're only going to come to Canada because it's a slightly less bureaucratic immigration system than the US. The US immigration system, there's more bureaucracy with that. You need a lawyer. It's more expensive. And when you think about where most immigrants are coming from, they're coming from India, they're coming from the Philippines, they're coming from China. Most of these people don't have the resources. I know a lot of people have been told they're coming with bags of cash, and they're definitely not. And they're definitely getting a massive pay cut compared to the average Canadian. When they get here, I think it's like 30% less the average immigrant gets paid versus a Canadian. So, I mean, you got to think like Canada is just going to struggle to attract workers because the US, for start off, has more manufacturing, and they're bringing more manufacturing back to the US from China, and Canada will benefit somewhat off that. But if they can't find the workers, and if the US is paying more money and it's offering a way better lifestyle, which it will, because Canada is just going to be decimated by this bubble implosion, like it will be. It's just a fact. At some point, it's just going to be absolutely decimated, and then people aren't going to want to come here, and then that's just going to drive the economy into the ground unless they can really turn it around. And now, the thing is, it could become a commodity powerhouse, but you would have had to start working on that 10 years ago, not right now. The problem is building refineries, pipelines, they all take time. And there's no capacity here in Alberta, for instance, for exporting oil. There just isn't that much capacity left. So you need those refineries, you need those pipelines, you need the seaports and everything else. And I mean, you can't build those in a couple of years. They take a long time. I mean, I think they're working on something in northern Manitoba, I believe, I heard. But yeah, how long is that going to take to be completed, and all the infrastructure put in and all the rest of it? So Canada could have been a commodity powerhouse, but it has turned, they just basically, they wanted to give out free money. Politicians wanted to buy votes over doing what was right for the country. And I'm afraid to tell you that all politicians will do this. I was fond of Danielle Smith, but she's doing stimulus right now. You know, she's probably the most right-wing candidate who's she's probably the most right-wing premier in Canada, which is like governor in the US. And she's doing stimulus. So that, what does that tell you? Like, it doesn't matter if it's whoever comes in is just going to try and buy your vote through stimulus. They're going to inflate things even more. They just can't do what's right. They can't allow the actual correction to happen so we can get to the recovery part. They just can't allow it. They try and engineer this soft landing every time. And there's only so long that can go on for when it comes to these debt bubbles, as we've seen with the US, and we're about to see the result of that play out. Man, I'm losing my voice, so I definitely got to go. I'm going to look for one more thing, and then... Man. Did anyone forget? When do you think the real estate market will bottom? I mean, it's a difficult question to answer because, again, you have to be more specific. Because are you talking about in real terms, or are you talking about nominal prices? Because I think in real terms, long term in Canada, real estate is going to be going down for decades. So that could mean that it's going up in nominal terms, but if inflation is running higher than that, then it's actually going to be going down. Like, your purchasing power is just getting less and less if you sold that house, essentially. And then you have to think about the CPI and all the rest of it. But even if you're talking about the CPI, I think it will struggle to have any gains in real terms over the next couple of decades. And of course, there will be times where it goes up. You know, that's going to happen. There's going to be all these fluctuations in markets for sure. But long term, I think it's going down in real terms. And that's why we wouldn't invest in Canadian real estate. And that's just my opinion. But I've done a ton of research, load of different places in Canada, into real estate and investing in real estate here. And there's just too many risks, And I think Canada has also kind of proved that it's not a neutral country. It's not friendly to investors either, whether you believe that's right or wrong. But yeah, the thing is, I don't think it's going to be a great store of value. Do I think it's going to be a better store of value compared to cash? Probably over the long term. I definitely think it will probably be a better store of value than Canadian lira. And the bottom, again, I mean, that's just really hard to say right now because we haven't even had the major event yet. We're kind of in this waiting period to find out what the yield curve, why the yield curve has inverted. And that could be commercial mortgage-backed securities. It could be the bond market collapsing because the Fed and the Bank of Canada and the Bank of England, they can't get inflation under control. And then the bond market just collapses. And then they have to come in and save it. And then inflation goes up even more. And that would just cause an absolute disaster and a spiral out of control. So yeah, it's difficult to say at this point, but I don't think it's going to bottom anywhere in the near term. I think you're talking like, if you look at prior cycles in Canada as well, when I've looked previously, it's usually been around 5-6 years. And you have to think, this is a massive cycle we are talking about. It's essentially since the early 2000s. So it's quite a big cycle, and it's gone up a long way as well. So it depends on the speed it comes down and a variety of factors. And it also depends on where you are, because different provinces, different places will react differently. Like Alberta has been in a bubble, but in a smaller bubble than, let's say, Ontario has been. So, it's difficult to say, but yeah, not anytime soon, in my opinion. That's for sure. And I think that's going to hurt people the most, because all these people who bought in 2021 with super low rates at these really high prices may be going to renew in 2026, and that will just continue the crisis. I mean, think about it. Let's just play out a scenario here, hypothetically, and say that, okay, there's some sort of event, some sort of liquidity crisis that causes a global recession end of this year. Or let's just say 2024, okay? Let's say that recession lasts a year, and in terms of the GDP and what they define as a recession. So we come out of that, it would be 2025. Do you think when you look at what happened in 2008, especially in countries in the US which had similar debts to what Canada has higher, but they had less, but higher, way higher than Canada had back then. You're talking like 2014. It didn't bottom out until 2014, and you have to remember prices started going down in 2006, not in 2008. So that was 8 years it took to bottom out. So the real estate market can take a lot longer than people expect. And it really depends on the recession. It depends on when unemployment. The problem is, to try and forecast a bottom right now is a fool's game, because you are relying on so many different things happening in the future, and you don't know the exact timing of that. Like, for example, when unemployment is spiking massively, when we're in that recession, then yeah, you can get more accurate on when maybe a bottom's going to be, because you can then see how bad it's getting and gotten, and what crisis we're going to be staring in the face. The scary thing is that we have so many different potential crises happening. I mean, you've got short-term rentals, that's a big one. You've got commercial real estate, that's a big one. You've got residential real estate. You've got the banks and the financial system. They're levered up like crazy. We've never, I don't think we've ever had this many things kind of converging, coming together as such. Man, I'm getting tired. you can see. But anyway, I'm going to end on that. I hope you kind of enjoyed this. I don't know if I'll actually keep this live stream up. I may just podcast it, because people aren't going to watch an hour and 17-minute talk on YouTube. They might watch the first 9 minutes of it, but they're not going to watch an hour and 17 minutes. So anyway, thank you so much for watching this. Thank you so much for being here. Thank you so much for all your support. Thank you so much for all the super chats. Honestly, I can't thank you enough, because as I said before, we wouldn't be here doing this if it wasn't for you guys, the viewer, because the fact is, I'd just be talking to myself like somebody who is clinically insane, like the people who are walking around in downtown Vancouver and downtown Calgary. So anyway, have a phenomenal weekend. Smile. At the end of the day, things are going to get gnarly, but if you're prepared, if you've done the right things, you can sleep at night. You'll be okay. Things will be good. There'll be investment opportunities. And at the end of the day, these things have to happen. These greedy people have to learn their lesson, but they won't, actually. I don't know why I said that, because they won't learn their lesson. They'll just keep repeating. They'll say, the Bank of Canada did this to me. It wasn't me. It was the Bank of Canada. And then they'll repeat the same mistake. But anyway, we'll leave them to it. Thanks so much, guys. Take care. Have a great Friday.